What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down what just happened during the FOMC meeting and some very important things that Jerome Powell just said that caused the entire stock market to crash. I'm also going to break down what's going on with the news, data, and technicals affecting Tesla in the markets, and what I do predict to happen to Tesla for tomorrow. Now, before I break anything down about Tesla, what's going on with the share price, and what I do predict to happen to it, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks, and any could be a free Tesla share. It's a limited time offer. The offer ends in just 9 days. Check it out before they run out. With that out of the way, let's get on with the video. Tesla was down 3.25% for the day, and overall, we had a very, very interesting amount of price action today. The market started off just holding up quite nicely. Tesla was actually pumping, getting to about $200 a share. And I warned everyone in my previous video, I predicted Tesla would be testing this 198.5 to about 200 level, and I told you guys be very careful around here because we have some major resistance. And this is almost exactly where Tesla got the rejections, and it ended up actually tanking. And that's because of the fact that Jerome Powell did cause the market to get rug pulled. Now, in the beginning, we were holding up quite nicely even after the rate hike decision came out. But then once again, Powell came out and he said some very hawkish things that caused the market to reverse. The rate hike came out at 25 basis points. In the beginning, the market liked this. The market was holding up all right. And the market also started to rally. Excuse me. The market started to rally over time despite this. Because for the most part, the market was expecting this. However, there were other things the market was expecting, and we didn't actually get that. Now, the comments came out in the very beginning, and the Fed made it very clear they do not plan on cutting any rates this year. The cutting is going to start going into 2024. That's when the real cuts start. That's when the real pivot, the true pivot ends up happening. And that's why the market ended up actually getting a negative response. That was part of it. Now, Jerome Powell made it very clear that he is not playing any games and he's not planning on pausing just yet. This was very contrary to what the market actually wanted. So to start us off, what did Jerome Powell actually end up saying? Let me just scroll all the way to the bottom real quick. I do apologize if this kind of messed up your view, but from the very beginning, Powell came on and he ended up actually talking about the fact that inflation is way too hot. Okay, inflation is still too high. So the Fed has a lot of work to do. The Fed has to continue to tighten over and over again. But the way in which the Fed is tightening is going to change. The Fed is going to continue to give us 25 basis point rate hikes. For this meeting, they also plan on doing this once again for the next meeting. They raised their benchmark funds rate of 4.75% to about 5%. That's the highest level since 2007. Now, because inflation is so hot and sticky, Jerome Powell mentioned the fact that they're going to be giving us more rate hikes, but their main goal is a tightening of financial conditions. And for them to achieve this, they're not necessarily going to have to solely raise rates. Instead, they're going to be monitoring the entire situation. The Fed is also going to be continuing to give us more insights about what's going to happen to the credit markets. Jerome Powell said there's going to be more tightening for the labor market, the credit markets, and also the housing market. And this is actually going to help do the job for the Fed to slow down inflation. That's why their plan is going to be to basically, continue raising rates a little bit more at a much slower rate. Watch the situation carefully, then pause and then let the effects do the rest of the work for them. That is their plan. They're not necessarily planning on pausing just yet. They're going to be most likely giving us another rate hike for May. Then they may pause around June. And then once the pause happens, they'll keep the rates high for the remainder of the year. And then they plan on cutting by the time 2024 comes. Now, here's the problem. The stock market was betting that the Fed would start cutting this year. And Powell said, no, that is completely wrong. He actually explicitly stated that the market was actually getting it wrong by rallying off the news and the hype that the Fed is going to cut this year. That is not necessarily the truth. Once again, we have one more rate increase this year after this one. Now, on top of that, Jerome Powell did actually, in my opinion, trivialize the entire banking situation. He did say that the banking system is sound and resilient. He also mentioned the fact that the overall policies for the banks are still going to help stabilize them. He mentioned right now that even though that is the case, he said SVB was a big outlier. I do disagree with that because I think a lot of banks are in very similar situations, and we're going to see more banks fail, most likely, in my humble opinion. But on top of that, Jerome Powell did actually criticize a lot of the regulators and lots of people watching over the banks. He also mentioned the facts that once again, there are going to be more increases. Do not fall for like all the hype out there about the Fed pivoting like right now. They're not even close to it as of right now. And besides that, he did actually continue to say that the Fed's going to keep using their tools to keep banking safe. He did encourage people to have trust in the banks and things like that. Once again, I don't fully agree with him on that issue. I once again think that he's exaggerating about how safe banks are. But for the most part, I still have to give this guy some props because he did say the truth about many other sectors of the economy. Once again, inflation is still high, inflation is too hot. The Fed is going to still prioritize that despite what's happening to the banks. He's also implying that we're not necessarily entering a state of quantitative easing, which means the Fed, yes, they printed out like 300 plus billion dollars. They added it to their like balance sheet and etc. But they're going to continue to tighten regardless of that. So all of the hype, all the excitement that the market was rallying off of is now just, people living in like la la land, people just joking around that don't even know what they're talking about. The market is still in a very, very cautious state. Powell is just making it very clear. Now, finally, let's talk about something else that's important for next week. I think we have PCE coming out. We have GDP data and also more initial jobless claims data. We have it also coming out for tomorrow, so that will affect how the market ends up opening. We want this thing to be relatively hot above the forecast of 197,000 jobs or jobless claims being coming out. It's also going to be happening about 1 hour before the market opens. So, with all of this coming out, this will affect how the market moves. So far, we're starting to see unemployment increase a little bit. So, I do believe this might be a little bit where we want it to be. So, I do think the market has a chance to try to gap up tomorrow, maybe try to push up near open. But I don't think it's going to last too much. I do think we're going to likely see more downside regardless of this. Now, for Tesla, I want to talk about a couple pieces of news before I break down the charts. South Carolina has become a $1.6 billion hub for the lithium investments from many, many major companies out there. There have been some rumors about many of these large companies, such as like Serba Solutions, actually partnering with Tesla. Not confirmed right now, but it is a real possibility. We know that there's really high demand for lithium, especially for batteries, and right now a lot of big deals are being made in South Carolina. I just wanted to mention this. It's not actually, once again, Tesla that's a part of it just yet, but I do believe it is a real possibility for the future, especially because it's very local for many of their cars. As far as Tesla goes, I want to remind everyone, okay, that yes, we're getting hit with some bad news because of the Fed, but you have to remember that Tesla has some very, very strong facets out there. We're actually seeing Tesla's sales continuing to surge in China. They're actually very close to the first quarter record already. They may even break a new record in China for the first quarter. In Europe, the same thing is happening. We're starting to see big improvements being made to Giga Berlin, and more deliveries are continuing to perpetuate over there. In the USA, look at the inventory levels, still very, very low. We're continuing to see Teslas being bought up thanks to the price cuts and other factors like that. Now, there has been some news coming out talking about the fact that Tesla's used Model 3 is down more than $11,000. Unfortunately, there is truth behind this, but this is actually part of what's known as a market equilibrium, meaning that we have to see prices continue to drop to actually reach optimal levels of demand. Why? Because demand and supply need to actually catch up and actually cross at a more efficient equilibrium, if anything. So when this is actually happening, I don't consider this bad news because remember, when Tesla announced the price cuts over and over again, this actually helped more of them to get bought. What I do want to actually say about this, because this is actually for the used vehicles, they're actually down about 21.5% since September of 2022. But I'm bringing this up because we're seeing a big shift in the overall vehicle market. We're actually starting to see demand slow down, so prices are starting to drop. And we're also seeing people not willing to take on the amount of interest on those loans when it comes to actually acquiring vehicles. So, with demand dropping, I would just want to note the significance of this. Despite that happening, we're still starting to see Teslas being bought up. The new ones are still being bought up. They're still getting very good amounts of deliveries. And I believe this is still very bullish news, seeing it, the inventory levels at these low levels. This tells me I'm not too worried about Tesla getting good deliveries or bad deliveries for Q1. I think they're going to have a very, very strong amount of deliveries for Q1. However, what does worry me is the margins. Because as prices drop, this is the same thing that another analyst from Morgan Stanley was talking about. If margins keep dropping like this, how will this affect Tesla's earnings per share? How will this affect the overall company? How will this affect their gross profit and other factors like that? We'll just have to wait and see during earnings, which is about, I believe, a month from now. So just be ready. Just wanted to put this all out there. Now, as far as the technicals go, I just want to note that Tesla has an increasing short interest. We saw about 16 million shares shorted just a couple of days ago. Going into like Monday, it actually increased to 21.6 million. So millions of more Tesla shares are being shorted. We're continuing to see the share price drop. And we may have seen more shorting starting today after the things that Jerome Powell said. He did say some bullish things. I know that article I showed you didn't mention it, but he did mention that there are some signs of disinflation. A couple things were a little bullish, but the large majority of what he said, maybe 70 to 75% of what he said was just more hawkish, more bearish. So despite that, despite the fact that, Tesla got a bounce yesterday, it even tried to push up today, these pieces of news, these comments by Powell will likely drag the markets down regardless, and this is likely going to negatively impact Tesla's share price. Now, going up, I want to note to everyone that Tesla does have a tendency of being green about 48% of the time on Thursdays. Thursdays tend to be weekdays for Tesla. So I wouldn't be surprised if we do see Tesla slow down a little bit more tomorrow, even if we do get a gap up off some good jobs numbers, hypothetically. Now, I also want to add that with strong earnings, Tesla has a history of beating on earnings. So I'm hoping that this could actually help us later on. But until then, there could be some selling pressure that ends up taking over Tesla's share price as we get closer to the big date. Finally, we had this big improvement in the price pairs ratio. We're actually very close to these previous highs. If this thing does like maintain these levels, which I don't really think it will, I think this will most likely see a bit of a drop going into today, maybe even into tomorrow, because of the fact that this often needs to cool off a little bit first before we continue pushing. And finally, Tesla's volume was about 150 million, so pretty average volume, but we did see a big increase in volume at the end of the day as Tesla started to actually get a lot more selling pressure. I did mention to you guys right here that the short volume has actually, it's been dropping for quite a while, so I was anticipating a bit of a bounce to come soon. We got a bit of a bounce today. This thing was at about 65%, meaning that we're seeing a lot more selling and a lot more shorting increasing. I wouldn't be surprised if we see the short interest actually increase for today once the data comes out. And all this tells me is that Tesla likely has some downside coming, and most likely has downside. Let's go over the bullish and bearish possibilities just to be safe, but I want to break down what I think is going to happen. So if you're bullish on Tesla, you have to remember that we have some resistance around this 195 zone. And if we break it, then we have this resistance line around 197, followed by 198.5 to 200. So we have quite a bit of resistance ahead of us. I don't see Tesla coming all the way back up to 200 tomorrow or even like 197. I find that very unlikely. But I do believe it's possible for it to try to bounce just a little bit off some pretty decent job numbers, or even like it trying to bounce off the fact that it was quite, oversold today. But if you're bearish on Tesla, you have to watch 190. 190 needs to hold, because if it doesn't hold, we're going to be testing gap resistance. Gap support around 188. And if 188 fails, Tesla will most likely start to fill this gap I don't think it's going to stop at like 185 because we do have a little bit of support there. I don't think it's going to stop there. I think it's going to come all the way down to like 183 to fill the gap. This could happen as soon as tomorrow, and I would guess maybe sometime during this week on either Thursday or Friday. We're most likely going to see Tesla come all the way down to the 180s. We're most likely going to see that happen, and that would be a more bearish possibility. But what do I think is going to happen? Once again, I think in the morning, it's going to depend on the jobs numbers that come out. Do we get a lot more initial jobless claims? My guess is we're most likely going to see it actually help the market rebound a little bit. So I think Tesla's going to try to bounce off this 190 zone, try to get to like the 193, almost 195, just a very, very small bounce. I think it's going to remain pretty weak. And as the day goes on, we're likely going to see Tesla continue to test 190, and we might break below it tomorrow. If we do end up breaking below it, we're most likely going to see this gap get filled either the same day or by Friday. Most likely that's going to happen. We're most likely going to see Tesla get all the way down to the lower 180s very, very soon. I know it's very unfortunate, but this is what the technicals are telling us. Make sure you watch 188 if Tesla fails at 190, because if it breaks that, the gap will most likely get filled. Now, when it comes to the overall market, what is SPY essentially telling us? Well, SPY came down pretty hard. It actually filled this gap down here. I was warning everyone that the market would likely push up approaching the meeting. We got the push up. Then I told you we're going to react depending on what Jerome Powell says. I I marked this resistance between this 400 to 402 level. I told you guys watch this very carefully because if we get a clean break above this, we had the potential to go a lot higher. It's like 406. Instead, we did not get a clean break. You could see we temporarily pushed above it, but then we came right back down. Then we ultimately got an end of the day sell off where the market got smacked pretty hard. So I'm thinking that we did come down pretty hard on the smaller time frames. We are oversold. So I think it would make a lot of sense for the market to try to gap up tomorrow off maybe some decent job numbers. Try to push up a little bit, maybe retest 393, maybe a little bit higher, but then we're most likely going to fail. And we're most likely going to see SPY continue to trade sideways, if not sell all the way down to 390 very soon. And if 390 fails, then we have to start watching these very high 380s, like 388.56 is a very important level to watch. I do believe this will get tested either tomorrow or by Friday, most likely, in my opinion. Now, for Amazon, I want to note that Amazon tried to bounce. I did call out Amazon a couple of days ago, but one of the things I told you guys is this is not financial advice, but I was actually holding Amazon calls, and then what I did is once I saw 100, that was my profit taking level. I secured profits from there, and I didn't really do anything from there on. I secured profits around here. Amazon pushed up, and then off the Fed meeting, we ended up getting the sell off. So once again, it didn't really affect me, but because of that, we likely have more downside to come regardless. There is this gap down here around this like 97.72 area. I'm going to be watching for a bit of a bounce tomorrow, maybe a retest of the 99. Maybe we get almost to 100 in the morning, and then we start to see more selling as time goes on, because I think the scary thing that's coming to the markets is the fact that the Fed is telling us that the tightening of financial conditions, the tightening of the bank conditions, could be equivalent to a rate hike, meaning that all the pain we're about to see is just getting started. And this is actually going to be what the Fed is looking for to cause pain in the financial systems, which means there will most likely be pain for earnings, most likely an earnings recession. A literal recession is most likely going to start, and we're going to see more and more selling pressure in the markets going forward. Jerome Powell also mentioned, I think I forgot to mention this, that the GDP forecast for the year actually decreased again, which means once again an increased probability of a recession, because that's what we use to define a recession, decreasing GDP from the economic standpoint. This is all telling us there's likely going to be more downside to come. I want to just mention that the mortgage-backed securities ETF from Vanguard, it looks like it's in a topping process. If I look at the daily chart, we do have a head and shoulders like formation that has been developing. And this is actually kind of scary for a lot of banks heavily invest in the mortgage-backed securities, because we have a left shoulder, a head, or right shoulder developing. We fail to break this resistance. This thing might start tanking. And if this happens to the mortgage-backed securities, a lot of banks are going to be in a lot of trouble during times like this. I don't think banks are going to have good earnings. I think it's going to lead to more selling in the markets, especially by the 3rd to 4th week of April, right? There is still more downside to come. For NVIDIA, This thing actually went a little bit higher than I expected. It managed to actually break 264. We got a quick pop to about 275, then we ended up coming down. We have an indecision candle forming. In my opinion, if it wasn't shorted as hard, if there was not as much shorting pressure on this thing, it most likely would have actually tanked already. But what I'm now starting to see is the potential for NVIDIA to be forming a top right here. We're most likely going to see this thing slowly, if not by next week, come all the way down to this 260 area. And if that fails, we already know where the support and resistance levels are. We're going to be watching 250, followed by the 244.5 area. So there's likely more downside to come for that, and also the overall market. NEO is forming a head and shoulders, intraday head and shoulders. Most likely going to get a sell off very soon on NEO. This 9.52 area is going to be the head, two left shoulders, a left shoulder and a right shoulder, and then more downside to most likely come to fill this gap. That's likely coming very soon. A big problem for the markets is look at Apple. Apple, to me, was forming, and I mentioned this earlier, a rising wedge like formation right here. And I told you we could see a break to the downside off Apple depending on what Powell says. I wasn't as confident. It really depended on him. But now this is looking like this rising wedge is going to play out. I know I haven't drawn this out, but I'm sure you guys could see it anyways. We're likely going to see Apple retest 157.5, try to bounce off of that, try to hold up a little bit, but if it breaks below this, we have quite a bit of room to drop to about 155. If that doesn't hold, there's 150, 149.6, and etc. Downside seems imminent for Apple. For Google, it had a really, really nice run in the morning, then it ended up failing. In my opinion, Google's going to try to bounce and retest 105. If that fails, it's most likely going to trade sideways and start coming all the way down to about 103, then 100, and etc. Triple Q, this thing got quite a bit of a sell-off today. It's going to likely try to bounce and retest 309. It might come very close or just short of that. It's going to likely trade sideways, and it really depends on how tech reacts. In my opinion, the QQQ will most likely eventually come all the way back down to 302, then down to the 300s, and continue to fall to the 290s as the weeks pass on. I believe this is most likely what's going to happen, and I believe that everyone should be prepared for this because tech is starting to show some signs of weakness. Look at the US dollar or the dollar index, really big drop to 102 and started to bounce from there. That's a very important support zone, but the reason the dollar is dropping so much is because of what's happening to the banks. In my opinion, 102 has been a very important support level. I'm hoping that the dollar bounces from here. If that happens, this is going to be bearish for the stock market. The VIX bounced off 20. I told you all 22.64 is a very important level. If that fails, there's 20 on the VIX. We bounced exactly off 20, a very clean bounce. In my opinion, I don't know if the VIX is going to just end up cooling off a little, then end up continuing to push up first, or if it just keeps going from here. It's got to be one of those two most likely. The VIX is most likely going to continue pushing, bouncing from here and just fly all the way up to 26, 28, 30. And I'm saying this because the market's most likely going to come down to cause this. Once again, implied volatility for the S&P 500 is most likely going to be going up, implying more selling pressure most likely to come. With that said, the treasury yield is still down. Going to be looking for a bounce very soon. It filled this gap, should bounce very, very soon. Get back to 36. That's going to be bearish for the markets too. We'll just have to wait and see. We do have two gaps above. There's one at 37, another at like 39. We have some resistance there. I'm going to be looking for this bounce to hold and this thing to actually continue popping. That's most likely going to form, in my opinion. We could even be forming a potential inverse head and shoulders on the 10-year treasury yield. If that's the case, if this does end up forming that and it ends up like playing out, this could be bearish for the stock market as well. But it doesn't have to depend as much on this because this is going to be dictated by other factors like the banking situation. I just want to note that if it does get the bounce, this would be even more bearish for the markets. Regardless, I still see downside most likely coming. So with that said, thank you all so much for listening. For Tesla, please be ready. I'm anticipating we might actually try to rebound tomorrow just a little bit into open, maybe gap up or something like that. But either way, I still think Tesla has more downside coming, and we're likely going to see this thing sell off and retest 190. If 190 fails, there's 188. And if that fails, we're most likely just going to straight up fill this gap, come down to the low 180s. And I think that's most likely going to happen either tomorrow or on Friday. But I am aiming more towards like tomorrow. Thank you all so much for listening. Have a great day. I know this video was a little long, but please, please, please do what you have to do for your own futures, what's best for your own selves. Thank you all so much. Tesla to the moon, because the long-term future is still incredibly bright despite everything going on in the world right now. And peace out.